Oh, hold on one second. All right, everyone, we are live. We have a special edition of Sensei Chat today. We have the Stephen McClurg, the CEO of Canary Capital. I was thankful enough to get some of his time today. We're going to cover a whole host and range of topics from XRP to ETFs to regulation, as well as everything in between. Stephen, let me throw it over to you. You want to tell us a little bit about who you are for people that might not know you?
Yeah, absolutely. So I grew up in East Texas and made my way out to California eventually for grad school at Pepperdine, and then I accidentally fell into traditional finance while I was out there. I was a rugby player. I met this guy that was like who I thought was a professional bodybuilder, and I was like, "Man, you're huge. I love training." And we ended up training together. And then I don't know, after a few years, I was getting some advice from him about, hey, I'm thinking about joining this investment bank. He's like, yeah, don't do that. Come work for me instead. I'm like, well, what do you do? Because I'm the CIO of Guggenheim. Anyway, that's how I got into bonds.
Wow, man.
By lifting weights with a big dude.
It's funny how these little parts of our lives can really kind of shape our direction of where we're heading. And it sounds like that relationship was very special to you.
Absolutely. Absolutely. So yeah, that's how I got into TradFi, and I did that for a long time. I was a bond trader, a bond manager. I just did a lot, from the early days of that firm all the way up until probably its peak.
Who would you say Stephen McClurg is today in 30 seconds?
Like in 30 seconds, I would say, I've got two fantastic sons that I absolutely love, getting them ready for college, and a beautiful wife that is always there for me, no matter how crazy I am or, what kind of adventures I go on, like quitting my job and jumping into crypto full time.
It's family is so important, and I wouldn't be where I am without the support of my wife too. So I know how special that is. What pulled you down the crypto rabbit hole? How did you go from TradFi, traditional finance to where you are today?
Yeah, I was, I looked into Bitcoin pretty early. It was actually an assignment because I was managing emerging markets at the time. And I also had a bit of a tech background, which was unique to a lot of people I worked with. So they're like, hey, what's this Bitcoin thing? You're the one managing foreign currencies and you have a tech background. Why don't you take a look at it? And this was back in 2010, 2011. And it took me a long time to really review and study and think about it. But at the end of the day, I really saw it as a interesting digital currency just from my video game my video game background. And and I got it instantly, just utilizing virtual currencies within video games. And then kind of fast forward to 2016, I decided that the peak of the bond market had hit, of a generational bond market that had begun back in 1986. The bull run was over, and I was looking for something new, and I thought crypto was the future. I focused at the time more on blockchain and tokenization of real world assets. I thought there was an opportunity for, number one, moving remittances around the world, and number two, tools that would potentially make the bond market more efficient, which it's still very inefficient. So I saw blockchain as a feature that could help these two areas that I knew a lot about and cared a lot about. So I jumped right in, quit my job, jumped into a tech startup, and off we go. That's how I got started.
Listen, guys, if you're listening at home, we're going to take some questions from the audience. If you can like and share the event, I'd really appreciate it. We want to get this conversation in front of as many incredible people like yourselves as possible. And I do appreciate that help. Stephen, let's go back to, what was the moment that convinced you to kind of go all in on crypto? Like you kind of talked about, what kind of led you into the moment, but you kind of really, not drink the Kool-Aid is the wrong way to say it, but like you've understood that this is now the most important thing in your life. Was there a certain moment that got you there?
No, and I wouldn't say it's the most important thing, but I definitely saw the potential for I did see the potential for blockchain and a revitalization of financial assets. There's a lot of financial assets that exist that are very esoteric, very clunky, hard to trade, illiquid, and there was an opportunity here to really democratize it, open it up for everyone. And some of the first things that I was doing back then was looking more at the democratization of private equity, and blockchain is something that certainly allows that. But moving on into remittances, I mean, XRP Ledger is a good example of, it was originally built for remittances, and then it's expanded to a lot of other things. But I thought that was super important, given the spreads that a lot of people pay to move money around the world can be upwards to 15%.
Yeah.
So and same thing with banks. Banks definitely have a monopoly on the system, and in moving away from a banking system into more of a peer-to-peer network system, I thought was brilliant. And I still believe in that philosophy, although I consider myself more of a rent seeker now. But I was definitely wide-eyed 10 years ago, and I was like, oh man, we're going to change the world.
I think we'll still change the world. It's just maybe happening at a slower pace than what a lot of people thought would happen or believe.
That's exactly right. I mean, and it is already. There's people that are, and the other thing that I saw too, by the way, and this is still true today, is a more of a generational shift in wealth creation as well. So it's given ordinary people the ability to move into areas that they normally would not be able to. And crypto was that, and now it's becoming a few other things. A lot of the things that were built in crypto and blockchain over the last 10 years have branched out to building AI and prediction markets and a lot of other areas that is still true to that democratization of finance.
Let's jump in now to some of our favorite topics on this channel. XRP. We'll talk a little bit about regulation, but I've watched a lot of your content with Paul Barron and a lot of your interviews, and you suggest that you believe 2026 could be some type of catalyst for XRP growth, maybe as the rest of the market deals with some headwinds. You think maybe XRP is looking pretty good? There's some kind of catalyst. Can you just talk to us about what you think might happen this year, or what you think XRP might achieve this year?
Yeah. So look, there's two major headwinds in the crypto markets right now. The first one is the 4-year cycle, which I still believe is intact, and I still believe that Bitcoin has a big pull on the broad crypto market. I do expect some divergences, but those divergences are going to be tough to get through, probably in this cycle, but next cycle, I do expect a lot more divergence. The second one, obviously, is also macroeconomic conditions. Most of the world's in a recession. Even though the US technically has GDP growth, most people feel like they're in a recession because we've experienced high inflation for the last 5 years. But with all that being said, I do expect Bitcoin to probably drop another 30% from here. October was the peak, and I expect the trough somewhere late summer, if not closer to midterms. And of course, that'll take the rest of the market with it. Now, I do believe that there's about a dozen cryptocurrencies that are associated with protocols that are building real use cases in financial markets for particularly tokenization, and that which does include stablecoins. So XRP is one of them. Now, am I saying that XRP is going to hit an all-time high this year? Probably not. There is too many headwinds for that, but this is a year of building. Anybody that's been through multiple cycles, like you have, like I have, a lot of people probably on the show that are watching, knows that the fourth leg of the cycle, which is the bull leg, is the year for building, and those that get out and build are the ones that really dominate in the next cycle. And I know for a fact that Ripple is really out there making acquisitions, building, getting involved. Hedera is another great group that is doing the same thing. They're not stopping. I mean, they're continuing to crank and building more enterprise solutions. And then, of course, there's a host of other protocols that are more what I consider open source protocols that aren't particular to financial rails or enterprise rails like Ripple and Hedera are building. But they will we'll probably see some dominance among some of the best of those as well, and that of course will be reflected in price. Probably in 2027, we'll see a big uptick in price in some of those. And but this is the year to build. This is the year to accumulate the ones that are building.
You have a unique perspective. You get to talk with all kinds of different hedge fund managers, pension managers. What kind of conversations are you having with them around digital assets? Are they interested in the Bitcoins and Ethereums, the big twos? Are they more interested in the utility aspect around maybe XRP and Hedera? What are those conversations like? And how do you approach that?
Yeah, with Bitcoin, first of all, which is obviously a little bit unique. A lot of these institutional investors, pensions, sovereign wealth funds, they are buying Bitcoin. They are looking to make an allocation similar to maybe a gold allocation, and that's a lot of how they're viewing it as more of a hedge, more of a flight to safety. In some cases, Ethereum. I know that the Ethereum ETFs have gotten a lot of flows, and there's a lot of activity happening on Ethereum, and I've got nothing against Ethereum. But the conversation we're having with Ethereum is, yeah, that's old technology. I want what's next. And so I'm seeing a lot of institutions just pass on Ethereum with good reason. I'll just give an example, right? Everybody's like, yeah, JP Morgan's going to use Ethereum. Well, actually they didn't. They took the code, they rebuilt a blockchain themselves, and now it's JP Morgan chain. And that's the problem with open source protocols like that, where you can't keep a moat around an enclosed network when the code is open source, and if people like it, they can just take it. It's really easy to do. So that's the problem with a lot of those that are expensive to run, which is Ethereum.
Do you see? When we talked a little bit about this before we came on. So you kind of see anyone that's basically developing on Ethereum now that there is newer technology, and they just maybe bridge it over to newer networks. You want to maybe talk a little bit more about that?
Yeah, no, absolutely. And kind of the second part of what on the institutional side is they are looking at things like XRP, Hedera, Solana. Yeah. A lot do care about Solana right now, and then of course some of the I don't even call them Ethereum killers anymore because there's nothing to kill. It's probably more Solana killers or competitors to Solana, which is like things like Injective is a really good example. Even BNB chain is it's an interesting competitor in that category. But that's where they're focused right now. They're like, okay, something like a Hedera, which is a unique, not even blockchain, it's hashgraph technology, or XRP Ledger that are very cheap and efficient to run. They care about those, and they'll actually don't mind looking at building things directly on those chains because of the way that they operate and the efficiency of them, as opposed to some of the ones that are way more expensive, to transact on, like Ethereum. They're avoiding, and they're seeing that. They see the data, so they're just kind of skipping over that. Sort of like, all right, I'm not going to invest in the Palm Pilot anymore because BlackBerry's out and iPhone's out. So this is what we're going to build on, and I think people realize that, but that's where the focus is. It's really interesting.
How do we get HBAR and XRP, in these products? How do we get them to the Ethereum or even the Bitcoin levels of investment from institutions? Like, how does BlackRock wake up one day and say it's time for a spot XRP ETF or a spot HBAR ETF? Like, what do we need to do to get there?
I actually think it's really close. It wouldn't surprise me if BlackRock files for a XRP, potentially Solana ETF sometime the end of 2026 or 2027. You've already got Fidelity, you've already got Franklin Templeton in the race there, so it's not going to be a whole lot longer before BlackRock also looks at this. Invesco just filed for a Solana ETF give it time, XRP will be there as well. And these are the largest ETF providers out there. So I think it has to do with a few functions. They want to see demand, they want to see high market cap, and it'll get there eventually.
Yeah, I tell my audience that, the reason they launched a Bitcoin product is because they had enough people on their website searching for a Bitcoin product, right? And I think once you get that, like I tell people, if you have an institutional account anywhere and they don't have the products that you want, you have the power to pick up the phone and let your financial advisor know that this is what you're interested in. I think that will help maybe move the needle.
Yeah.
An important question here. A lot of people go back and forth on speculation of US banks maybe possibly using XRP. At what point do you think it's going to take for US banks to say, we want to use the technology for maybe cross-border, or we are interested in using RLUSD? How do we get to that point here in the United States? Is that a post-regulation? Is that, do they have the court ruling? Is that enough? Is that a gray zone? Where do you think we are?
Well, what I think is going to happen is, there's a handful of major banks, and a lot of them have several different business lines. JP Morgan's the good example of one that has really embraced Ethereum's technology for what they're building. I think every bank's going to have its own stablecoin, and what's going to happen is banks are going to partner with certain protocols.
Yeah.
And it wouldn't shock me. By the way, I'm just completely making this up. Like, don't quote me on this or anything. Well, I'm just saying, like, just throwing a name out there, like Morgan Stanley. Like, it wouldn't shock me if like a Morgan Stanley goes to Ripple and says, "Hey, we want to partner with you." And then you might have somebody like a Goldman Sachs going to Hedera and says, "We want to partner with you." And you might have these protocols partnering with multiple banks, but there will be several choices out there. It's not just going to be one that they all use, right? And but the ones that are the most positioned to get that done from a Wall Street dug in perspective is probably Ripple first, and then probably Hedera, and then probably Solana as a far third. But those are the ones that are really dug into the financial system the most. It wouldn't shock me if I see partnerships coming out of those very quickly. But I think Ethereum too.
I think people need to understand that not every bank is going to want to build their own solution. That comes with setting it up, hiring the people, developing, auditing, testing, piloting, sandbox. There's so it takes years to bring something from an idea into full scale. And instead of doing all of that, they can pick up the phone and call Ripple, right? Or they can call Hedera and say, "Hey, we want to, get up on your network to use such and such technology." And they can do that in a pretty quick process. Where it used to take maybe 6 to 18 months to get a new infrastructure set up at a bank. Now it can be done in a matter of weeks or a quarter or something like that. Yeah. Is that really going to help unlock this new, because most smaller banks use the big banks rails, right? They have to pay for that. They do that. Do you see those banks, instead of now doing that, going to the Ripples and Hederas of the world and just kind of cutting out the middleman, as you would say?
I do. And not to jump too far ahead, right? But if you look at what's happening with the Clarity Act, it's not that the banks are trying to shut it down because they don't want competition. They're trying to delay so that they can actually have the technology to do it themselves. They don't want to jump through all the regulatory hoops while there's these stable coins that are out there. But what I believe is going to happen is when they're ready and then they can actually do something, then they're going to support changes in legislation. And then, like I said, like a Morgan Stanley is going to say, well, we don't need these money market funds anymore at our banks. What we're going to do is just offer, USD on XRPL or whatever, stable coin that they want to do. But they're going to have stable coins that they either white label or directly offer from these providers. And that's exactly that's what I see happening. There's no need to build their own infrastructure like what JP Morgan's been, slogging away at for the last, 6 years. They're just going to pick up the phone and say, can you integrate this into our banks? And we know it can be done, by the way, because there was a moment and it got shut down by the FDIC. I don't know if you're aware of this, but about 2-3 years ago, maybe longer, there was a group that was setting up the ability to buy Bitcoin directly on community bank platforms. And so they started integrating that, and all these community banks are trying to compete with the big ones, and they're like, yeah, you'll be able to buy Bitcoin at our bank, and the FDIC shut it down and took them all out. This was during the prior administration.
Yeah.
But the technology is built to integrate with the bank's backends for Bitcoin. It's so much easier to do it with a stablecoin like like RLUSD.
Do you think, Ripple's now got the approval from the OCC to set up their bank? Having the NYDFS, New York Department of Financial Services approval to launch RLUSD in the first place, having maybe a Fed master account, do you think that really does put Ripple in a different playing field than some of these other competitors out here once they're able to establish and get all that stuff up and running?
Oh, absolutely. It really does. That's why I put them as first.
Yeah.
And then given the network of Hedera and what they're doing, they're probably a distant second.
I've seen, in Japan in Q1, we're supposed to see RLUSD launching. We've seen other denominated backed currencies like the Europe stablecoin launch on the XRP ledger. We've seen a real backed stablecoin launch on the XRP ledger with Brasa Bank down in Brazil. What is maybe slowing? Why is it I feel like it's a little bit slower for more currencies, more countries to start launching their own stablecoins? Like, is there something that needs to happen on a global scale for more currencies to launch, or is this just the evolution of progress? It just takes time.
Yeah, I mean, it has to do with supply and demand, or more so demand itself, right? So Europe's a little bit of a different beast because the regulators in Europe hate blockchain, and they want to have nothing to do with it. So even though these Euro products are launched, there's just not a lot of demand for it, and the regulators are putting a lot of guardrails around it. Some of the other currencies that we're talking about too, they're just smaller in market cap. So if there's not a lot of demand there, you don't want to put a whole lot of resources into it. I think about myself, building ETF products. It's like, I don't want to put a whole lot of time and resources into an ETF if I don't think that there's going to be a lot of consumer demand, and I don't know when it's going to become profitable. It's just a business decision.
Understood. And then before we move on here to some ETF questions, today Ripple launched Ripple Treasury, right? They acquired G Treasury. I covered that in an earlier video. Whether it's the treasury business, the stablecoin business, what part of Ripple are you most bullish on right now? What use case do you say, yes, that's going to solve a real problem at scale for the entire world? Is there anything?
Well, look, I maybe going backwards, the thing that I think is going to solve real world problems is the remittances network. I think that's super important. They may not make a lot of money off of it, but it's very important. The thing that I think is going to be the best for the ecosystem is actually RLUSD. I see that thing exploding once they're integrated to the rails of a lot of the partners that they have. I think there's a big opportunity for RLUSD to even surpass USDC.
And that's what I think too. I mean, it appears that RLUSD is as of a higher tier when it comes to who regulates it here in the United States. I think USDC just has I can't remember if it's not a NYDFS approval. It's kind of maybe a little bit lower tier. So if the U.S. government was interested, because we talked about maybe the U.S. government doesn't want to do a central bank digital currency. Do you think maybe the U.S. government would outsource a digital dollar to a company like Ripple?
I think they would. I mean, it could also be the Circle. I think those are probably going to be their two biggest competitors for that. But we'll see. But I do think that they would outsource it. Just a little bit of inside baseball. I mean, a lot of countries have been looking at doing this for years. As a matter of fact, I built an early stable coin back in 2018 that would qualify as a security. Some of the filings are still out there that you can find, but long story short, China came in and asked if we would build something for them, and we had to politely decline. But they, countries are doing it, and they're approaching people that have been doing it, that are early. And so there's no secret that the U.S. government will go in this direction and probably reach out to either Circle or Ripple on this.
Man, I'm really looking forward to reporting on that once it happens. Shifting gears, here's maybe some ETF questions. You talk with a lot of people. What is the best question an institutional client has asked you about maybe an XRP ETF in your lineup?
Yeah, I mean, one of the questions that comes up a lot is, well, what is the value of the token itself? What does it do? And we really have to explain the attachment of the token to the network itself, and obviously, the long, the long pros of what goes into that. But that is a question that comes up a lot. I think it's a very good question. I think with Bitcoin, it's easy because the token itself is is really a currency that people understand to be a currency and treat as a currency. And then you get into some other currencies like Litecoin, which I think could win the semi-privacy race. And and then Monero, of course, that's already won the full privacy race. So I think those are the big dominant players that everybody gets. But it's having to explain that, no, this is the gas, and there's a way that I always explain it that people tend to understand. And I'm like, almost everybody's got one of these, right? And you have a lot of applications that you use, and everybody's got a game that they play, right? It's like Bejeweled or Solitaire or something, and everybody likes to play a game on your iPhone or whatever smartphone you have. And those games run with digital currencies. And when you run out of time or run out of lives, you have to use that digital currency to buy more so that you can keep playing. And but at the end of the day, it's dollars that still kind of fuel everything, even though we get the concept of digital currencies. But what if the iPhone platform had its own currency that you have to buy into to pay for things to run on it globally? That way they don't have to deal with foreign currencies from every country. They've got one virtual currency that buys more lives in your games and also pays your bill and does all that. That's essentially what the gas is of a protocol. So the tokens are the gas, and they are the native currency for that particular protocol that is neutral globally. You don't have to trade back and forth between dollars or euros or pound sterling. It's one currency that kind of rules them all. And of course it fluctuates in value, but so anyway, that's the conversation I tend to have. Understood. And they tend to get it. They're like, oh, okay, that actually makes a lot of sense.
When you're looking at XRP, Solana, HBAR, how much of it, for Canary is driven by actual client demand versus the firm's conviction for those specific assets?
Man, it's highly weighted towards where we believe demand is.
Understood.
And we do take a couple of risks on tokens every once in a while where we believe that it's still very early, but they have a lot of promise. Axelar was one that we filed for a year ago, and of course the whole team left, and the project hasn't been abandoned. It's still going, and it's still going well. But the token price is down a whole lot. So is there demand for that right now? Absolutely not. Right.
Yeah.
So that was a bet that we made that we probably I'm glad we didn't launch it.
Yeah.
But we filed. We attempted. We've got a couple of others, Injective is one that's way further along than that, where they're building some really, really cool things at the protocol level, particularly in financial services. So that was a filing that we put out there that we haven't launched anything yet, but because we have that belief in that team and what they're doing, and that they can rise up and probably get to the top 20 market cap. Right now they're or when we filed they were around like top 50. So yeah, there's a handful of things like that where we're kind of get ahead of demand and where we think demand is going to go. And we're going to be wrong sometimes, and we right sometimes, but that's kind of the name of the game.
That's the hard part about the crypto market. Things can change on a dime, and sometimes it's not something that you're doing specifically, but stuff way out of our control. And maybe just, we're along for the ride here. Where do you see this market heading, right? We kind of understand that financial institutions are very interested in being able to lower the cost of payments. They want to be able to maybe earn yield on that nostro vostro money that's kind of sitting there, kind of soured around the world. What is the next killer use case for crypto over the next 5 to 10 years? Do you have any thoughts on it?
Yeah, I do. I mean, one of the things that I'm seeing happening right now that it's going to lead to other things is, I saw that I think it's ETHZilla is looking at tokenizing, hard assets, hard income producing assets like cell towers and things like that. And that's kind of my old world, in asset-backed securities, where I was very involved in aircraft engines and airlines and airplanes and cell towers, locomotives, you name it, hard assets that produce income. And that's really, really interesting to me because it's a highly illiquid market. And if you can put it on chain and give people fractional ownership and they get yield off of it because they're income producing, then I think that's super interesting. And we're already seeing it go that way. I haven't seen anything come out yet, but that is definitely the way that they're moving. The bond market is also set for disruption. There's been some kind of weird things that have come and gone out there, but nothing that's really significant in my opinion. But what I believe is going to happen, it's going to be, there's going to be an exchange for bonds that's hopefully, I mean, not hopefully, but more of a competitor to say Market Access, and people that are, former bond traders like myself. Market Access is a platform where you can trade odd lots of bonds against other institutional clients. And but I think that is the next iteration here. People are tokenizing equities. Well, let's tokenize bonds and build a platform where it's highly liquid. That's why I got into this over 10 years ago. And that's an area that I would like to get back involved in now that there's a whole lot more possibilities and potential there.
Yeah, I was watching, I think you were doing an interview with Paul Barron and you'd brought up cell towers. And, there's just so many assets that are kind of illiquid right now that we don't even realize that will probably come on chain. I'd imagine one day you might have a cruise ship or container ships and things like that. It's so incredible, the evolution of the technology and where it's taking us. And I think that's one of the most exciting parts is we just don't know yet where it's taking us, but we're getting there piece by piece. Let's shift gears to the Genius Act, right? We were able to get the Genius Act over the line. Usually when a bill is signed into law, especially one that comes with all of this rulemaking that needs to be done by the CFTC and the SEC and other regulators, have you seen any movement from banks in the U.S., financial institutions, more open to adopting stablecoin technology? Where are we with that, in your opinion?
Well, what's interesting is, the commercial banks are a little bit slower, but the custody banks are making really big pushes here. So if you look at the three largest custody banks in the U.S., which is, BNY, they've been working on blockchain technology for 5 years now. They even have the ability to custody Bitcoin and Ethereum. Robin over there, the CEO, is an amazing guy that's really forward thinking and really pushing for that. And then they also own Computer Shares, which is a transfer agent that has the ability right now to go fully digitized if they wanted to. State Street is also in the running. U.S. Bank, they're probably third in line behind those two as far as building all things digital, but they're our partner in the ETF business and a lot of other things. And we know they have the desire to get caught up to BNY and State Street. So we'll help them any way that we can. But these are the largest custody banks, and some of them also double as other firms. So like U.S. Bank's also a big commercial bank, which I think is one of the reasons why they're moving slow, because they have to deal with the FDIC. And for the longest time, FDIC was really under the purview of Elizabeth Warren, who hates blockchain. And So anything that the FDIC touches, there's an issue.
Why do and we don't really want to go too full political here, but like, why do you think there are some people in Congress and the Senate that are so against the technology? Is that special interest groups, that fund those candidates that are totally against this technology because it could replace what they do? Is that maybe something else? Do you have any feelings?
Yeah, look, I think I think there's two main reasons. One of them is exactly what you just said. It is special interest driven. The other one too, and this is, there was a U.S. senator that said this to me, said that, when, we're doing all these things to, protect areas of the world, right? And one day there was this massive breach at an exchange, and this was back in 2017, where the North Korean government stole billions of dollars of Bitcoin. And then they were, and he's like, okay, we're spending all this time and attention to blockade tens of millions of dollars worth of, money and equipment going to North Korea, and they can just go and steal $1 billion worth of Bitcoin. We got to shut this down, and so that's sort of an attitude of like, okay, for national security reasons, we can't have this technology exist because the North Koreans could just steal it. The Iranians could steal it, and these are our sworn enemies, So I think that there's a lot of angst around, national security as well as dollar dominance. The reality is we can't have dollar dominance forever. We've had a great run. But every country that has a dominant currency eventually yields to someone else, and we're already starting to see that happen, probably faster than a lot of people thought. But there is a lot of angst around that.
Part of it for me also, I think, is the lack of understanding of what the technology actually does. I think we see a lot of the Sam Bankmans, the FTXs. These horror stories when an individual person might have done something wrong opposed to the technology itself. Do you think, it is also a lack of understanding in Congress and Senate of what the technology does and why it's important?
Yeah. Absolutely. I think there's a lot of people that just don't understand it. There's a lot of issues that are tangential issues, such as energy, right? For the longest time, there was a big attack on Bitcoin for using too much energy.
Yeah.
But now that AI data centers are being built everywhere and people's bills have tripled, nobody's saying, damn AI, got to shut it down, So it just all depends, right? And again, who's paying you, So
yes.
AI companies, are paying off our elected officials, then, they're really not going to care if it's causing electricity bills to go higher.
Man, I don't know how we get money out of these types of things, but it feels like the issue continues to get worse. Looking here at where we're heading with the Clarity Act, and I want to circle back here because this is an important piece. I know you had and we discussed this briefly before, but how do you see this playing out over the next few months? Are we going to get a deal over the line here this year, or is this going to get pushed into the midterms and then forgotten about for a few years?
Yeah, look, I think the Clarity Act in its current form, it can easily be passed and should be passed. That's my opinion. Now, how soon will it get passed? I have a feeling it's going to get delayed a couple of months, but it's definitely a first half of the year thing, and people are just going to have to compromise and get happy with what they've got, as long as there's not anything in there that causes damage. And by the way, I don't believe there's anything in there that causes damage to the industry. There's a lot of things in there that provide clarity, and then there's a few things that provide really good outcomes for the industry that are just positive new laws. But the clarity itself is super important because people just want to know the rules that they can work within. I mean, for me, I don't really care what's in the bill. I just want to know what I can and can't do.
Yeah.
And once I know what I can and can't do, I can go make money, right? And I mean, and I hate to be just very capitalist about it, but that's just the way it works, right? Just tell me the rules so that I can go out and run my business and not have to look over my shoulder.
I think that's one of the points that Brad Garlinghouse made it at Davos, right? And kind of reliving the thing that they went through. Man, without their fight, where would the industry be at this point if they would have given up? And so It is really important to get this done. I just hope they can compromise. Compromise is the word for 2026.
Exactly.
All right. Is there anything else happening around crypto in the United States right now in 2026 that you feel is a big tailwind? If such and such happens, this is going to explode the market. Is there any one thing outside of regulation, outside of stablecoins, outside of Genius that would give an additional boost to people's holdings?
Yeah, look, I think the biggest issue that we have right now that could end up being a tailwind is really going to be is the macro environment. Um, we've had high inflation for a long time. We've got high rates right now. There's a lot of people straddled with debt and they can't get out of it. So I think some of the even though I'm just going to say this, even though I fundamentally oppose some of these suggestions, I do think they're good for the country,
Yeah.
such as putting a cap on credit cards, credit card rates.
Like 10%.
Disallowing corporations and hedge funds from buying single-family homes. It'll make homes more affordable. Again, fundamentally opposed to it. Libertarian in me says no, but seeing what's going on in the U.S. right now, where people can't afford homes and they've got high debt, like these things could fundamentally change that. And it's one of those situations where it's like, okay, something does need to be done in the absence of lowering rates. But I do believe that the Fed fund rate will begin going down probably later this summer.
Yeah.
And that will certainly help. I mean, inflation's already below 3%. Trueflation is below 2%.
Yeah.
Which is good because people can afford groceries again. But we need rates to be lower so that we can spur economic activity among the broad populace, not just the banks. And I do believe that's going to happen, and that will be a tailwind that will move us back into the next bull market.
And another thing maybe holding back, and not to get too deep into this, but do you think maybe a relook at the current tariff policy that we have currently right now would help? I think last year in 2025 we had 600 different policies with different countries on tariffs and different items. Do you think that's maybe holding back some growth and innovation here in the United States because people don't know what's going to happen day to day? They can't plan.
Yeah, well, that's exactly it. It's not the tariffs that's the issue; it's the uncertainty of the tariffs that is the issue. So I'm actually in the camp of I would like to see the income tax eliminated and us going back into a tariff system and reducing the size of government. Well, none of that's going to happen, but if we can at least reduce our income taxes reduce some government, which by the way is one of the biggest drivers of inflation, and also increase tariffs to pay for things, that's great. But we just need certainty around that. And right now there is no certainty. It's like, tomorrow somebody just be like, oh yeah, your tariff's now 40%.
Yeah.
Or the Supreme Court could say like, yeah, tariffs aren't constitutional, which actually I believe that they are.
Yeah.
But there's so many things could happen. And then next midterm elections, everything could change. So there's too much uncertainty and people just can't plan.
Yeah, no, I think you're right. One topic I wanted to talk about before we end here today is AI. We've seen AI impact how everyday people do any task, and also companies. I was listening to the Davos World Economic Forum. Jamie Dimon was on stage, basically said that every single department in Chase is using AI to figure out how to be doing things better, right? And we understand that AI and crypto, Ripple has agentic AI with G Treasury. How do you think AI is going to maybe play out either in blockchain or in general here in the US over the next maybe 12 to 24 months?
Next 3 to 6 months, right?
Yeah.
It's moving so fast and so many people are catching on and using it. I mean, I still kind of use old man AI where I use it as a search. And that's probably like my biggest use for it, but it works really well. And I like to use multiple. I like to use Grok primarily, and then Chat GPT secondarily. And then I also use it to help me compose emails because it's really easy when you're busy to be a cold, heartless person when you respond to people. but sometimes it autofills for me, and sometimes I like it.
Yeah.
And then sometimes I type something out that's like 2 sentences and expands it to a paragraph.
Yeah.
And okay, so AI just saved my, saved my emailing and search skills. But in all seriousness, I mean, even at our company at Canary, we do utilize AI quite a bit in on the marketing side. So we don't have a large marketing team. We've got 4 people, but most of them are utilizing AI to do the work of 8 people,
Yeah.
and it is quite spectacular. And that's going to continue to happen. We're saving a lot of cost on legal as well. I mean, I've got a chief legal officer, but he's doing other things. I mean, he's also the president of the company running fund operations, because half of his job he's utilizing AI to write contracts, and a lot of our ETF filings are done by AI as well. So no, I mean, I'm being very pragmatic right now about what it's like in my day to day. But the flip side of it too is you are seeing a lot of layoffs due to AI. I don't think it's the majority of the layoffs that are out there, but it is a certain percentage. So you are going to see a lot of careers move away from that. And what does that mean? Does it mean that less people are going to be employed? I don't really think it is. You're just going to have people that need to learn new skills, to where they're either programming or people that know how to use AI efficiently to actually replicate those positions that are gone. Because unless you know how to use it, I mean, like I said, old man AI, if all you're using it for search and emails, then it's not really helping you a whole lot, other than making your time a little bit more efficient.
Yeah. And I tell people that watch this channel, if you're in any kind of role, if you start understanding and having to use AI, if it comes down to you and somebody else, they're going to pick the person that has some proficiency in AI. And I think, it's really important that people understand where we are right now and how this is going to change our whole economy and how we do things for the better, but it's also going to have a negative impact on layoffs and other things. And so people need to be prepared. Is there anything that we haven't touched that you want to mention or talk about?
Well, the only other thing I'll say is, I mean, we'll this kind of goes back to AI again, in that conversation. But what a lot of people don't understand too is, I mean, we've gotten to a really interesting place as far as data retrieval, creating things, utilizing AI. But to get to the next level of sophistication, it's going to cost a whole lot more money than what has already spent to get us to where we are right now. So there's definitely a cost curve involved to make AI just incrementally better. So a lot of people think, well, next year we're going to have robots that are, I'm like, okay, yeah, don't get too far ahead of yourself. We're not going to have an Ultron probably for another, 10 years. But we will, it is going to start slowing down a whole lot, the knowledge curve. But just utilizing the technology that exists today, people haven't even scratched the surface on what they can use that for. And once that happens, I do believe it's going to cause, a dramatic shift over the next 2 years.
I'm really looking forward to that. Stephen, thank you for your time today and helping us better understand what's going on in the crypto market with ETFs, with regulation, of course, with XRP, Hedera, Solana, and Ethereum. I really appreciate everything that you do for the space, and it's an honor to speak with you. And please, if there's anything you wanted to say in closing, now's the time.
Yeah, no, thanks so much for having me, Rob, and everybody keep grinding out there.
All right, man.
The bear market will be over before you know it.
Love that. All right, Stephen, you have a great day, and thank you for your time again.
Absolutely. Thank you.
Aloha. All right, guys, there it is. Stephen McClurg. Oh, man, it's incredible to have somebody on with that level of knowledge that we can just sit and have a in-depth conversation of where we are. Man, I was prepared. I have 5 pages of questions here. I spent quite some time making sure that I was ready for this interview. There's a few things that I didn't get to ask, but maybe when we have him back next time, we will ask those questions. But Great to see all of you. Thank you for supporting this interview with your time. I did pull some questions actually out of some of the posts that we made, and I hope you guys heard those in the conversation. Let's check in with the chat and see what's going on here. We got Polished Ninja, we got OSOK, we got Giga Chad, we got Jordan, we got Ariana here. Love to see you guys. How's it going? How's it going? I think it'd be cool to have a conversation with Steven where you guys ask all the questions. You know, I think that would be a fun conversation. Maybe we can set that up. But it does sound when listening to Steven, he does think that 26 could be a bearish year. Now there's some things that might improve that, but it does look like we might be in for a rough period for the time being. I was looking at something that the U.S. government might be going into another shutdown on poly market. I had a video that I made earlier today. I think there's like a 77 to 79% chance that we go into another shutdown, of course, which would push any vote on crypto, the Clarity Act, back again. So, man, that's unfortunate, but be ready for anything. That is exactly right, Melby. Exactly right. Crypto Prince, thank you, man. I appreciate it. Yeah, it's just nice to sit down with somebody like Steven, and he has such a great understanding of technology in the market, and he has connections that we don't have, and to be able to get his personal expertise and opinion on a lot of these topics, I think is very, very powerful, and excited to talk with him more. Let me see here. We got Just Maui says he noticed the government buying critical mineral companies. Now they're going to, after uranium mining companies, they need to power and run AI. I think you're absolutely right. I think some of these materials is vitally important to national security. And I would imagine you're going to see some more moves in that area to maybe, make sure that you have those materials. Definitely. Shutdown would start on the 30th or 31st. Let me pull this up. I think it runs out on the 30th. It would start on the 31st if memory serves me correctly. Let me hold on. Let me see. Do I have the post? I wasn't really prepared to do a full chat here after, since I was going to spend a little bit more time, but I did put together a video. Let me see if I can find that really quickly for you guys. Let me see. Is this it? No, that's not it. Is this it? Yes, I found it. I found it. I got you guys. Give me a second here. I'll pull it up. Oh. All right, I got you. Here we go. Pulling it up now. Screen share. All right, so here's what I was looking at. This is specifically what I was talking about. And so poly market shows a major shift in momentum, with traders now pricing in 77 to 79% chance of a government shutdown this Saturday. The surge reflects growing skepticism that a deal will be reached before the January 31st deadline. If these predictions hold true, you might see a significant risk-off move across both traditional markets and as the deadline approaches. Also here, just to give you some information about maybe what this is about, the current continuing resolution that funds the federal government expires on the 30th, so it would start the 31st. The main sticking point is what's being reported in the news here from Yahoo, is that it is the funding of the Department of Homeland Security. And I think we've all kind of seen on the news why that could be. And so I definitely don't want to talk about that, but that is some of the stuff. Rusty AUS, great. Nice to see you. Thank you for supporting the stream. I appreciate it, man. I hope you have a good day at work. XRP burn rate random. Like I can make a video about the burn rate for XRP. The only issue is that it wouldn't be a great video. The burn rate is really not going to come into effect here. Like the XRP ledger has been live for what, 13 years, and you've burned through 14 million XRP. If every transaction in the world happened on the XRP ledger, you'd burn through about 34 million XRP per year. So in 10 years, that would be 340 million XRP. You wouldn't even be able to burn through a fifth, a 0.5% of the token supply within 10 years. It's just not a good video. It's just not a good video, man. I'm not gonna Mehdi, I'm not your prediction guy. There's a lot of other content creators that'll give you their predictions. I'm just going to report the news and the facts and go from there, man. Of course, I want the price to be higher, but I do listen to the people around me, and I know that there's some people that believe prices will, 26 will be a good year for the XRPs, the Hederas, the Solanas of the world, and some people believe that we are in a bear market. So who am I to know one way or another which way we're going here? I think there could be a lot of great things that can happen if regulation gets passed, and if that gets kicked down the road and treated as a talking point for the midterms, that's going to be really bad for the U.S. So. Yeah. Of course, Jay Hoffman. Thank you so much. Love the seal. Yeah, got the seal on the XRP. I took down the other stuff for the interview. I just wanted to make it a little bit more cleaner. Yeah, we could have asked more questions about ETFs and things like that. I know there's some things that Steven can't say, because he does run a company that has the ETFs, and so I didn't really want to put him in a position where it might have been uncomfortable. So we'll work on another interview with Steven. I think there's a lot of things that I'd like to kind of follow back up on and talk with him, but I think that was a lot of fun. Now, the question is, do you guys want me to come back later and do another chat, or do you guys want me to, you guys want to see me on Friday? We are yelling here, K-Money. This Clarity bill is going to destroy a lot of crypto that won't be able to keep up with regulations. I think that's a fair point. That's a fair point, K-Money. I think there's a lot of crypto companies that probably shouldn't be crypto companies. There's only so many use cases that are going to, be full scalable. And I think that some of the crypto market is just a money grab scheme, whether, they might not market it as that, but, when you raise money to try to solve a problem that, Ripple or XRP or HBAR or Solana are already solving at scale, really what impact will you have, and I think the problem right now is there's too much selection. There's too many things, and there's only so much retail money at this point, and we need more institutional money into the space. And when you have all of this retail money spread out across tens of thousands of assets that probably won't be here in a year or 6 months, I think people end up losing a lot of money, and that's unfortunate. I have been take a look at the beach. I can't do too much right now. I messed up my back last week, and I'm still trying to recover from that, but I'll work on that. All right, then listen, let's end here today then. I appreciate your guys' time. Thank you for the support on the content, and I will see you next time. All right. Aloha, guys.